Manqoba Madinane is an FX commodity strategist over at RMB Global Markets. Dr. Philip van Rensburg, who's the founder of tax rescue specialist for ProGroup Tax Rescue. I think Dr. Philip, I'll take his applause, he's not here. And Mr. Gilbert Mapula is the acting CEO of the Export Credit Insurance Agency. Great. Okay, cool. So we can kick off with our conversation. And I'll take a seat. And if there's any questions at the end, I'll be sure to have you ask them. Got it. You guys see me? Yes. Yeah. All right. Great. Okay, so I'm going to kick off with Christo, is that Dr. van Rensburg? There we go. Okay, Doctor, we'll give Dr. van Rensburg 30 seconds to get on.
Standing ovation. Standing ovation.
Good, thanks. All right, let's kick off with Kirill, who's closest to me. And Kirill was telling me about his long flight to Cape Town and all of the things that he has planned for this week. So if you have any good recommendations for Kirill, please chat to him after this panel and suggest some good restaurants. But Kirill, I've been reading quite a lot of your pieces in prep for this panel, and you've put out some incredible research. And the one research piece that you put out was a commodities outlook for 2025. And you highlighted a lot of macro, lower rates, geopolitical tensions, trade wars, digital currencies as well. And, I look back at your predictions, they were pretty accurate. They were bang on in terms of price targets. You managed to call most of the commodities across the board correctly. So I'm going to ask you a tough question. What's your outlook for 2026 onwards in terms of the commodity market? Where do you see us going?
Thank you, Koshiek. And just a bit of introduction. I represent CIU International. It's a commodity research unit headquartered in London. We have two major arms. One is focused on advisory service and another on market research, with around 500 people working for the company across the globe. We are focusing on all sorts of commodity markets, ranging from fertilizers to steel, aluminum, and ending with precious metals. So I specialize in the latter one, covering the gold, silver, platinum, and palladium markets for the company. So before I answer Koshiek's question about 2026, I'd like to say a couple of words about 2025. The year has almost ended, but nevertheless, what a year it has been. If I was to sum it up in one word, I would say the year was characterized by anxiety in the markets. Yes, it's always present because it's the nature of human psychology to experience this sort of emotion when we are uncertain about the outcome, about the future of outcomes of projects or things which are not dependent on us. So in 2025, there have been plenty of reasons to be anxious among the market players. Obviously, we have the usual culprits of concerns about inflation, about economic growth, about interest rates, monetary policy, geopolitics, rising government debt. But on top of that, we also had the great disruptor coming on the stage in the face of US President Donald Trump, who essentially turned the global trade flows upside down. So every morning when you are waking up, watching the news, you never know what's going to happen And this gave a significant boost to uncertainty, to market stress. And I think the main focus of this year has been on managing this uncertainty, adapting to it, and trying to secure supply channels, because you never know whether your commodity is going to be next on the tariff list. And this manifested in some crazy movements around the globe in some commodity spaces. Like, for example, if we talk about precious metals, we have seen physical shipments of physical gold, silver, platinum from London, Asia, Middle East, all corners of the world to the US market. And I know the same was happening with copper and some other commodities. As local US users, we were trying to ensure they have enough liquidity available on the domestic markets. So they saw a lot of preemptive stockpiling. And yeah, it's quite unusual that some commodities had to be shipped by air because it was that urgent, like was the case with gold, which is normally gets shipped by air anyway, but doesn't often happen on the silver market. So yeah, this was the year of, if I could put it in a sentence, it's like almost riding a roller coaster in the dark. You never know what the next twist is going to be, so all you can do is sort of prepare, adapt, and try to learn how to navigate these difficult markets. And this is the reason why we are seeing such significant gains in the prices of precious metals in particular. I think gold is up around 50% so far this year, silver around 60%, and PGMs were the best performance, surprisingly, up 70% for platinum and 65% for palladium. So what's going to happen in 2026? I think we are not transitioning into the year which is going to be calm or boring. It will be another roller coaster year. However, we are now seeing that dust raised during the 2025 turmoil is gradually settling. The rules of the game are becoming a little bit cleaner, a little bit clearer, and we have used to sort of this uncertainty regime, and it will continue to affect market decisions. And next year will be, I wouldn't say exactly the same, but there will still be a lot of uncertainty in the market, probably not to the extent we have experienced in 2025. But nevertheless, I believe that safe havens, or the commodities with safe haven credentials, such as gold and silver, will maintain their appeal for retail investors, for institutional investors, and for central banks. And it will be the year when I think the markets which got a little bit detached from the fundamentals during 2025 will get back to their fundamentals roots. Because obviously this year the fundamentals picture was very heavily interfered with political decisions and geopolitics in general. So next year, by no means I'm telling that it will be a quiet year. There will be plenty of twists and turns, lots of bumps and surprises, but hopefully not as dramatic as in 2025.
Okay, that's also a very diplomatic answer, Kirill. He didn't say any, he didn't give us any price predictions or, he didn't take any risks. So I'm going to come back to you, Kirill, and ask you more tough questions. But that's an excellent answer, by the way. So, you mentioned riding a roller coaster in the dark. And I think it's a great time for me to bring in Christo. So firstly, Christo, congrats on, you've fast approaching your 6.5 million clients now, right? And that's such an incredible success story. Been watching everything with Discovery recently. You announced X stocks. You're just doing a ton of really, really cool stuff. Take me through what it's been like as, a senior executive looking after the largest cryptocurrency digital asset exchange for you this year.
Thank you so much. Maybe by means of introduction, Christo, country manager for Luno South Africa. Luno is a crypto exchange which was proudly founded here in South Africa all the way back in 2013, which interestingly enough makes it one of the oldest cryptocurrency exchanges in the world. And just by a means of history, Luno was also, back then it was known as BitX. It was the first crypto platform that enabled ordinary South Africans to purchase Bitcoin or invest in Bitcoin with Rand. So not to go through any other intermediary. And since then, it's been quite a ride. Very similar, I guess, with the crypto markets. But I think we've really come to a point of acceleration in 2025 with quite a number of product announcements and integrations. And as you mentioned, we have over 6 million customers only in South Africa. It's more than 15 million globally, almost close to 16 million globally. We operate in a few different markets as well. And most recently, we've diversified quite a lot. We offer over 50 cryptocurrencies or crypto assets on platform, which make up about 90% of the total market capitalization of all crypto assets globally. And then most recently, we launched a product called X stocks, which is tokenized US stocks, which tracks the value and holds the value of US stocks. But I think what makes that quite unique is that it enables South Africans to invest in US stocks without actually holding shares. Yes, you don't have voting rights on the shares, but that's not really a value proposition for many who invest in shares. You can do so directly with Rand. There's no need to go through an intermediate broker to do USD conversion. And then most recently, we announced the integration with Discovery Bank that will go live towards the end of the month, early December, which now enables Discovery Bank customers to invest, buy, sell, and trade in cryptocurrencies right through their banking app, which I think the significance of that integration and that partnership is a few years ago, a lot of the banks in South Africa de-risked from cryptocurrency. They did not enable or allow crypto businesses to hold bank accounts. And to have come so far where the banks are now integrated natively with a platform such as Luno, I think is quite a momentous task, an achievement. I think what we've seen as well coming out of the bear market from 2022 into 23 and now to 25, we are moving away from almost backdoor speculation, which the crypto industry has become to know. And we are moving more into boardrooms and in legislative benches where there's a massive drive for institutionalization of crypto assets. There's a significant global drive for it. I think, as Kirill mentioned, Mr. Trump and his administration is largely a catalyst for it. I call it the Trump paradox because depending on the mood and the nature of the tweet and the trade decision that goes out, it has a similar effect on the crypto market that it has on other commodities. But what we're seeing is that there's a global narrative of digital assets moving into mainstream, into the fore, which I think is important that this is an asset class that can no longer be ignored. It's something that needs to be considered as part of a broader investment strategy. We're seeing, if we look to the US, several US states now made it possible for pensions to hold crypto asset and invest in crypto assets. There's a lot of regulatory clarity coming out of the US with the Genius Act that governs how stable coins should be governed. Also a move for, I guess, broader dollarization that we see in the world. There's the Clarity Act that is currently under review that will have a lot of defining structure on how crypto assets are defined, whether it is commodities or securities. And that just paves the way for broader global adoption. I think closer to home, crypto assets are regulated under phase. Financial services providers or crypto asset service providers need to be financial services providers. But there's still a lack of clarity in terms of a lot of our regulation that prohibits access to the broader financial markets in South Africa that needs to change. So there's still a long way to go. But I think the momentum, if we take a zoomed out lens and we don't only focus on what happens in the markets now over the last few weeks with the risk off sentiment and the global turmoil we're seeing, there's significant momentum that's been gained from this asset class. And I think we will see far greater global adoption into the traditional space.
100%. And, Christo, you and the team are doing incredible work. So, thank you for driving that adoption across not just SA, but globally. When you mentioned the Trump effect, I saw Manqoba smiling, and I'm sure it gives you palpitations being on a global markets desk when you just see the Bloomberg flash up and it's like, oh, another tweet, and another post, and you just see the markets go haywire, right? And from your perspective, being on the desk, where the markets don't fully close anymore now, what is it like prepping or planning a hedging strategy or a de-risking strategy or a position where you don't hold anything overnight? And how does that change over the last couple of months or year or so since the new developments we're seeing in geopolitics?
Yeah, that's very interesting. I think, there's a major structural shift that has happened. The narrative, news flow, is actually disjoint from what the market is doing, right? We're seeing a quite unprecedented compression in volatility, implied volatility in options markets, and that's where the hedging is, as well as realized volatility. We're seeing this across both FX as well as the resources. It's quite a structural shift. So if you think about it, you think that Trump and the noise that he makes would cause market volatility to increase. It hasn't. So it's quite a structural shift where we find that, especially in the resources environment, clients typically want to focus on their business, on minimizing earnings volatility, and so they would typically deal with very vanilla type of like collar, type of like instruments. So because of this volatility compression that we've seen, and it's quite perverse in what feels like an uncertain time. But I mean, we normally talk in the markets an acronym, TACO, Trump always chickens out. So essentially, this is a paradigm shift where instead of global geo-economic negotiations being run like we are used to, Trump has introduced this mercantilist approach where it's big bang shock, but we certainly don't land where the shock implies. And the derivatives markets are sort of pricing that in. And we're seeing this divergence where we are compressing volatility. Implied volatility that's priced up by the options markets is higher than the realized volatility. The normal, FECs are not value accretive anymore. We're seeing increased appetite, clients to do more exotic instruments. So it's quite a perverse environment. But for me, on the strategy side, I mean, the tweets that normally happen on a Sunday evening get clients wagging, right? I normally say just calm down, because the markets have learned this, that, you know, none of what Trump intended has happened. So where he lands is far from what the shock implies. So we've also adapted to that, where we consistently talk a message to say, you know, fade volatility. So that's our thematic play, and that's how we talk to our clients.
That's actually very reassuring.
Yeah.
You know, I would have been terrified if you said, go long volatility.
No.
My portfolio is already in a bad place. All right, so I want to bring you in on this, Philip, in terms of trade wars and all the volatility we're seeing and how that's actually translated into regulatory policy. I mean, you look after tax. I know, you know, VAT refund issues is something we spoke about, you know, before this panel. Take us through how you've seen changes filter through in terms of, you know, tax legislation and the regulations surrounding that as it relates to not just commodities, but, you know, global trade in general.
Yeah, it's actually a difficult topic to discuss, as our tax system and laws are based on case laws in the modern world. So if you take in consideration that where certain laws has been written back in 1960 is causing bottlenecks, as the SARS systems can't keep up to date at the modernized world in supply chain management, in the commodity trading, the modern way of contracts, the ways of financing certain commodities and trades. In each day, this is getting developed, and it's getting more complex and complex. So on legislation, I think it would be based on going forward on different interpretations of the tax law applicable to that trade and transaction, and for the best legal team to argue in court why their opinion of the interpretation should be the next set value of going forward and say, this is how it should be handled.
You know, again, you know, to kind of cushion this question, because it's a very loaded one, do you feel, based on your experience, and you're a tax expert, that SARS is very consistent in their approach?
No, I think SARS is maybe consistent, capped to certain individual auditors on certain cases. So the interpretation of the law is as consistent as that specific auditor. So we'll all have the same case, SARS. We got different auditors. Mine will go through within 3-4 days, and we'll refunds. There's some cases in my firm on commodity trades that was disputes with SARS over a year before they addressed us for a legal tax opinion and some assistance to get this resolved. And then there's the repetition of queries SARS are asking, because it's the same company with 4 or 5 different periods, with 5 or 6 different auditors working on a period, and all of them interpreting the law in a different way. So I would say there's some inconsistencies of the standard of each auditor related to the same cases, but the law is straightforward. I just think it's the best way that, and I think that's why my firm has a job for the last 11 years, that your compliance pack that you submit to SARS need to be audit ready. You need to actually do the audit for SARS within that field, within that tax law, to make it as easy as possible for the SARS auditor to interpret the law with your motivations as you seem fit.
Look, that's a compelling case to use your firm, that's for sure. Nobody wants to get stuck with SARS bottlenecks, right? Whether at a company level or even a personal level. Um, Kirill, the one burning question I had for you was around gold being, store of value. I think previously, up until about 2022, we saw a very strong correlation between price and lower yields. I mean, the opportunity cost of holding gold changes in a different yield environment. And that's kind of broken down since then, maybe the last 2-3 years, where gold has just kind of rallied despite, yields uptick. I mean, how does all of that play out?
Yeah, you're right, Koshiek. Historically, gold and yields or interest rates have been negatively correlated, and most specifically, gold is negatively correlated to the real yields or real interest. What economists understand by this is that you take the nominal interest rate set up by the central bank and you subtract the rate of inflation. That way you get the real interest rate or real yield. So why are they negatively correlated? Or used to be negatively correlated? Because gold itself doesn't pay any interest. So in that sense, it's very hard to compete for the yellow metal with the likes of cash or the bank deposit where you can get interest rate, or with government bonds or treasuries, which also deliver a yield on the holding of these securities. Or, for example, with stock markets, where you get paid dividends if the company you hold performed well. So whenever the real yields or interest rates go up, that means that the environment for gold has become tougher, and it's getting more difficult for it to compete with the other financial assets. However, the correlation not entirely broken down, but weakened significantly since 2022. And this is an interesting development because it's a quite unusual thing to happen on the market. And the main reason for this was, we believe, the loss of trust in the system. Not just the loss of trust from ordinary citizens like you and I. It's the loss of trust on the much higher level, on the institutional level, or even on the governmental level. So this loss of trust was triggered mostly by a specific event. It was the commencement of the war between Russia and Ukraine, and what shortly followed, the freezing of Russian central bank's assets up to $300 billion in the Western banking system as a punishment or as a sanctions imposed on Russia for starting this war. And it was a completely unprecedented event, and many allies and market of the US itself and obviously all other market players got very concerned about these developments because they suddenly thought, oh wow, if we are holding US dollar denominated assets, then we are no longer safe. They can be expropriated or we can be punished for not being aligned with the foreign policy of the United States, for example. So central banks significantly accelerated buying of gold after this event. And they have not entirely, but pretty much insulated the impact of the interest rates on the price of gold after this event. And we have been seeing them buying significant amounts of metal each year, and it doesn't look like they are going to stop anytime soon. So they will continue to provide the backbone support to the current bull market for gold. So yeah, this is my take on what's been happening and why we are now talking about the loss of trust on a structural level in the global financial and economic system.
Yeah, thanks for that. I mean, it's an excellent explanation. It also points out that, finance and economics textbooks are being rewritten in the period that we're in, right? It's just completely out the window. Christo, I'm going to ask you the digital gold question. I know you hate it. I think anyone in our industry, in the crypto space, knows there's an obsession with Bitcoin. And Bitcoin gets all the headlines and, it kind of unfairly so. But behind Bitcoin, there's, 20,000 plus other instruments. And, for everyone in the room who are perhaps less familiar with those instruments and how it plays out in the ecosystem, what else is out there beyond Bitcoin?
I think maybe just to, I think Bitcoin has significant value and utility, right? And I think it's the original cryptocurrency or crypto asset. And to Kirill's point, where there's loss of trust in the institutions that we see very prevalent in the traditional financial and commodities markets. That loss of trust was exemplified already in 2009 after the subprime mortgage crisis in the US, where the white paper for Bitcoin was written, right? And I think in the, I'm paraphrasing, but in the original coding of the Bitcoin white paper, it says, Chancellor, a second bailout, right? So that loss of trust has kind of ignited the rise of crypto and Bitcoin. And Bitcoin is often compared to gold. It holds a lot of the same values, it's scarce. And I think rightfully so. And we see the accumulation of Bitcoin very similar to the accumulation of gold. I think the accumulation of gold as a reserve asset by central banks has now outpaced that by the dollar, obviously because there's the global movement of de-dollarization that we're seeing. But I think Bitcoin has its rightful place, and it is a very impactful and powerful crypto, right? And I think it's still pretty much the catalyst for what we're seeing in the market. In terms of other cryptocurrencies, as you rightfully mentioned, there's more than 20,000 in existence, more popping up every day. And it can very easily be very overwhelming, and it can kind of fade the real utility and the value of this asset class. I think when we look at digital assets and those assets that we list on our platform, we look at the utility that it serves, we look at the foundations, is it sound? We look at, obviously, the global adoption of it as well. And I think that's very key to consider. I mentioned the Trump paradox earlier, where you have a leader, a significant political leader that drives regulation and pro-crypto regulation, but at the same time launches his own asset and his wife's asset. So it really blurs that ethical lines. And a platform such as Luno, obviously we didn't launch. We don't list the Trump coin or the Melania coin, and we didn't buy into the hype that surrounded that because the foundations of it are not sound. So that to us is quite important. What is the utility that it serves? Also, what is the blockchain that it operates on? Does it offer value to the blockchain? I think we are seeing quite significant projects coming out of Solana blockchain, and obviously as these projects emerge on those blockchains, the value and the utility of the cryptocurrency that's supported on that network, like the Solana coin, obviously increases because the demand for it goes. Unfortunately, not unfortunately, but what we are still seeing is that all other crypto assets or digital assets are still very closely following the movements of Bitcoin. So when we see a de-risking sentiment that arrives in global financial markets, other crypto assets will follow the same pattern in terms of dropping in value. But I mean, same to the point, the accumulation of gold as that strategic reserve or reserve asset. We saw the same with Bitcoin, where a lot of corporates started accumulating Bitcoin as that reserve to hold on their balance sheets to hedge against inflation as a safe haven asset. Unfortunately, we are now at that situation where a significant downturn in the market means that these accumulated assets are at a loss, and we're seeing that there's a lot of offloading happening. But the crypto market is very broad, it's very diverse, and there's a lot of utility locked in it. I haven't even touched on stable coins and the opportunity that stable coins presents in the world. Here, not only referencing US-based stable coins, we know the two dominant players, USDT and USDC, but local stable coins, especially from emerging markets such as South Africa and other emerging economies across the continent. There's significant value and utility that it holds to facilitate, cross-border payments, not only from a retail and a remittance perspective, but also on a wholesale front, where large chunks of money needs to flow between different markets. Stablecoins obviously facilitates that with ease, and because everything is on the blockchain, it's immutable, it's safe. So there's a lot of value in it, and I think that's the important thing to look when you look at the crypto market. Look outside of just Bitcoin, and truly look at the utility that the assets support.
And on that, Christo, maybe very quickly, a brief explanation on the ZAR coin. I know you've partnered up with companies on the ZAR coin recently. How does that work?
So from our point of view, we just listed a local rand stable coin that serves utility through ProGroup, and as an exchange, we offer access to invest or to hold this asset. And for a rand stable coin, that's pretty much, it's 1-to-1 to a rand. So you load physical fiat rand onto Luno, and you can easily convert that into a stable rand. And the utility of that at this stage is not that broad, but I think going forward, as more and more partners get on board and we expand the network, then obviously the adoption will increase. To give maybe another example, in our Nigerian market, we operate in Nigeria as well. There's a significant need for stable coins and for dollar stable coins just because of the Naira and how poorly the Naira is performing. And what we're seeing is that the regulator in Nigeria is quite adamant that this is the usage and adoption of stablecoins, US-based stablecoins, is directly driving the volatility of the Naira. And from a Luno perspective, we immediately de-risked, so we unlisted all of our stablecoin assets. But that meant that the market went underground. So a lot of players went to peer-to-peer networks where they still traded in USD, because that's commonplace in Nigeria to immediately convert your Naira into USD. So there's significant use cases for this across the continent. And I think when you look at the broader crypto market, but stablecoins specifically, I think Africa is poised to be the leader in the adoption and growth of that.
No, I fully agree with that, Christo. And let's pick up on the stablecoin conversation, Manqoba. But on the other side, there's the actual coins, right? And the rand has had, or the ZAR has had, an incredibly strong year against the US dollar. US dollar weakening is common across this conversation, whether it's gold, whether it's Bitcoin, even the stock market, when you see elevated valuations. Just from your perspective, is this a theme that you see persisting into 2026 onwards, where you have a weaker dollar suppressed for a number of reasons, and you have rand strengthening and a flow into emerging market currencies?
No, absolutely. So we hold a structural view that the compression in real yields in the US, simply because inflation expectations are relatively elevated, and we still think that the Federal Reserve will institute further rate cuts. We see a lot of fiscal tailwind, headwind rather, in the US economy that will devalue the US dollar. So we think that is a structural theme into next year. We're very surprised at the moment what is happening, where it weakened around by 10 percentage points through the first half of the year, and then has just been not moving for the past few months. We think a lot of that has got to do with what was previously increasing institutional hedging activity against US dollar that has been curtailed. And that's a function of what we believe is just a global developed market currency debasement theme, driven by all these DMs are just ramping up on the fiscal side and debt. We're seeing that trend across the euro. We're seeing that across the yen. So what's happening? There's a mechanical support to the dollar because the other majors are weakening a lot more. So institutional investors that had been hedging against US dollar weakness are now seeing the dollar tentatively, and I want to emphasize tentatively, as a place of relative safety. But from a fundamental perspective, we see the weakening into next year. Now that dials into our view for the rand itself. A lot of the appreciation we saw in the rand through the first half of the year had to do a lot with a weaker US dollar. But we want to emphasize we're seeing a broadening of idiosyncratic rand resilience. And that's because of the significant fundamental terms of trade boost that has happened. That's all because of the PGMs, we just heard earlier on how much they have risen. That's because of the gold price, that's because of the weaker oil price. So all of that is combining into a fundamental underpin for the rand. And we actually see an increasing risk that we will see USD ZAR back to the 16 level at some point by mid-year next year. So that's a core, like, fundamental idiosyncratic theme for the rand, where it will be more and more resilient. Yeah.
That's an incredible progression, right? Considering where we were 2 years ago. So I'll pause the discussion there. I know there'll be one or two very good questions. Can I take a question?
We still have 7 minutes.
Okay.
So maybe quickly 2 questions from the audience. 2 questions quickly. Okay, the gentleman, another person, and our CEO. So ladies first. So can you kindly start? I'll give you 30 seconds. And of course, let's try to be quick. Can we get a mic there? And of course, by this gentleman. Yeah.
Hi, okay. Okay, so my question is actually for Philip, Mr. Tax Rescue. Because we haven't had a tax problem yet. We were like, oh shit. But I think the bigger your company gets, the closer you get to that oh shit kind of moment. So my question was basically, because I know that you've done some work for a couple of mines in the country, basically getting them out of tax situations. How do you firstly avoid, I'm not trying to take away business from you, but how do you firstly avoid a huge tax issue in the future by collaborating with SARS? Are there specific things to look out for in the commodity industry? And then what is the turnaround time if you are at a point of no return? How quickly can you fix that?
Yeah.
Just before, can we take both? Then we can just answer once, right? The last one before we respond. Quickly, 30 seconds. Can you get a mic? Then we can just respond.
All right. Okay, I'm going to ask the question straight. On the trading side, I just wanted to understand your guys' opinion, because obviously we can't control Trump, because, Trump is Trump. So with the dollar being what is for the first time unstable, if we move away from the dollar and look into like a different kind of investments, just wanted to understand on a trading platform, do you think it's possible, because the way the dollar started, it started with the dollar bartered against the gold nuggets until it got taken away from that, and it's just the dollar now. Do you think it's possible to then now in the new economy and the new trade sector to make a cryptocurrency against real life mining minerals like chrome or iron ore? Just ask, I know it's a wayward question, but the same way, because that's how the gold started. Is not then now possible to take cryptocurrency and value it against real assets? Yeah, that's the question.
Yeah, thank you. To answer your question on how to avoid future tax problems, I think it's a big key for your audit firm or tax firm to have audit-ready submissions. And I always say the 5 Ps, proper preparation prevents poor performance. So, and I don't think that's something that you as an owner should worry about, because you have to know that your tax team is competent or affiliated with experts that's competent to make sure that your submissions on requirements that was called by SARS is up to standard. So there's no quick fix. And relationships, I think long-standing relationships within SARS is the key for key-ready audits to get addressed timelessly. Because I've seen the impact that delayed refunds, especially with exports that is zero-rated, because you're just an administrator on behalf of SARS, and you've paid money for your commodity, you exported this as zero rate, so you haven't received anything, so you want your money back. So actually you are the funder for SARS, where it should have just been an administrative purpose. And with a tight margins out there on commodity trades, that you can actually make big losses. If you take in consideration now interest and penalties raised by SARS, if your VAT refunds has not been timelessly get out, and that puts significant pressure on working capital and existence of companies. So to answer your question, it is good if your audit team is not as competent, because then my firm has work, but it is bad for you to be affiliated in your specialized field of commodities. Make sure that your audit firm or tax firm do specialize in your specific industry. And that's how would you have the narrowest time frame on resolution bottlenecks or problems with SARS. I don't know if that answers your question. Turnaround time, you got the SLAs of SARS, of your 21 days or 60 days, or notice of objections can go up to 90 days. And I think that is where personal relationships over the years of your firm and officials with SARS play a key role. That when you submit things, it can get addressed immediately and not just lay there and it's not been pulled or ordered or whatever for months. Because that's a big bottleneck, is everything has been submitted and it's just not getting addressed to. So turnaround time, it shouldn't overstay the period of the SLA of that SARS actually gives. So if you can plan your cash flow according to that, and you've got audit-ready documents and you've aligned with the right team, I think you can have a good cash flow management program within your fields of what do you trade.
So, to answer your question, so I think we're already seeing it happening. So tokenization of real-world assets is extremely a hot topic at the moment. I mean, stable coins is pretty much a tokenization of a real-world asset where it's backed one-to-one with whatever fiat currency the stable coin is. We are already seeing gold, and there's quite a lot of gold crypto assets that trade that. But I think where we're heading towards is less of a token that is created to track the real world asset, to you said other commodities that you mentioned in your question. Whereas if we maybe referenced the NASDAQ that announced that they want their stocks to trade directly on the blockchain. And I think that's the key point here, is that we are moving into a global world where blockchain technology is going to become so integrated into our financial ecosystem that tokenization and that trading of other commodities and precious metals on blockchain technology will be possible. So I definitely think we're moving towards that, and it's accelerating quite rapidly.
We have been given another 10 minutes, so which is great. So can we take the very last three questions from the audience? So there's a gentleman here. Any other questions or comments for the panel? There's a lady here, my lady there. The last person. Okay, two. So you are the last two, so in that order. Can we get a mic here?
Yeah.
So introduce yourself and of course the question, and then to my lady. Then we'll just answer us. Thank you.
Thank you. Sorry, I wanted to ask Christo again. What do you think it takes for corporates to adopt using stablecoin? Because individuals have been using it for FX for quite a while, but what does it take for corporates to do that? Because I think that will change everything.
I think there's a significant use case. I mean, I try always to find practical examples. I think, again, multinationals in Africa is quite a key point. So we haven't fully solved for it yet, but the opportunity lies in, if you look at countries where you have a fledgling local fiat currency, where they hold on to their local currency reserves. Nigeria is a good example. You have multinational corporations that need to get money out of the country into other countries. A lot of companies, African companies headquartered in South Africa with operations across the continent, are facing this problem. They can't get money out of other countries. So there's a significant use case for the adoption of stable coins, whether it be a dollar-backed stable coin or, rand, it doesn't really matter. But there's a significant use case there. I think the cross-border element to it is also quite significant in terms of corporate payments, so similar to that. And I think the reason from an emerging market in a South African or African context is, the payment rails, cross-border payment rails, is slow, it's expensive, and it's unreliable, whereas blockchain technology and stablecoins solve that. It's immediate, it's immutable, and the transfer fees, the transaction costs are significantly less. So there's massive opportunity there. I think the challenge is regulation. There was a reference made to legislation that is antiquated and not fit for purpose anymore. I think South Africa is case in point. Exchange control regulations, it's regulation that was put in place to safeguard South African rand inside the borders during apartheid, which is no longer necessary. So it's absolutely antiquated legislation that is not fit for purpose for the modern financial system. So regulation needs to keep up as well to enable this. So there's significant opportunity for the adoption from a corporate perspective.
One last question, my lady. Can she get a mic? And then in your responses, you can give your final thoughts, recommendations for the way forward.
Okay, hello. My question is really brief. I wanted to know, is there a place for technicals in the South African market? I know you mentioned a lot of fundamentals. Are the technicals solid enough to where retail traders can actually trade?
Yeah, no, absolutely. Well, I'm a technical strategist as well. So it's something, it's a framework that we've built into our processes. I call it a mosaic approach, where I don't necessarily believe technicals alone have value, but it's when you fuse the two with a fundamental understanding of markets, be it resources, FX, whatever it is, to formulate what we call a mosaic view that's a lot more robust and has higher forecast accuracy. So that's been value accretive for our clients, and it can be extended, I guess, across retail platforms as well. Yeah.
Any last comments from the panel?
Yeah. So maybe from me, parting shot, I think for the broad commodity cycle, forward-looking, the dollar weakness is a factor that will sustain upside pressure for the entire complex into next year. But what we want to emphasize with the dollar is the theme is it's a correction, it's not a capitulation. The structure of global FX reserves continues to favor a dominance of the dollar. So it has reduced. So we're looking at 46% or so being US dollar. Second largest holding now is gold. There's been quite a significant accretion of gold FX reserves holdings, but that number two spot is at 11% of the global FX reserves. So it gives you a sense that dollar dominance is still in play. We have a correction in terms of its valuation that continues to support the resources complex in general, particularly the precious metals. We are a little bit worried about gold's valuation, but nevertheless, I mean, if the dollar does weaken like we think, I think it's another party next year. Eh? Yeah, that's me here.
I think from a digital assets point of view, the leaving thought is it's an asset class that is not yet mature. It's still developing, but I think it now finally has a seat at the table in the global financial market space. And when we speak of dollar assets, gold assets, I think very soon digital assets in the near future will also be part of that mainstream conversation.
Yeah, I would like to just add my final opinion on, I think, as we said, that the modern era on finance, taxes, how things are structured, that you should be open, because I could see the bottlenecks on the difference of a proof of payment when a contract was signed versus when it was actually paid, and the deficit in currency, and what problems that can create, because SARS will pounder on why there's a deficit. They can't just see, and that's why you have to be audit ready when you submit to address that prior. So I think, Christo, there's a big market for digital countries in the modern area in finance and taxes, and that professionals in the finance world need to adopt it sooner than later, because that will streamline with all this modern AI technology that's coming in with audits and stuff like SARS, will have a limited time frame on how long it will take. It will fast things getting done. And if the professionals in today's area don't keep up to that, you're going to sit without a job.
And finally, I would like to go back to the subject of trust. Trust in the current world can actually be commoditialized. And if you are not long gold, then you are long politicians.